One of the biggest criticisms of Bitcoin and crypto in general is its lack of real-world use cases. Traders buy and sell cryptocurrencies amongst each other on online exchanges, but this is more akin to an online casino than a useful technology. Thus far, the only tangible manifestation of crypto is crypto ATMs or CTMs. These allow users to deposit cash to buy crypto or sell their crypto in exchange for cash. In recent years, tens of thousands of CTMs have popped up at grocery stores, gas stations, and other retail locations across the country. The number of CTMs in the United States peaked at almost 35,000 in 2022. It has since declined to about 27,000. Bitcoin Depot, the largest CTM operator in the US, has seen its share price decline by almost 90% since going public. The Bitcoin and crypto communities have long touted blockchain's supposed superiority over the traditional financial system. But if blockchain is really so great, why have CTMs been such a flop? In this video, we'll look at the rise and fall of CTMs and what this can tell us about the crypto industry. So how does a CTM work? To use a CTM, the first thing you need to do is get a digital crypto wallet. This is quite easy to do. There are various apps you can download which will give you a unique crypto wallet. If you want to buy crypto, you go to the CTM, insert cash, and scan a QR code from your crypto wallet app. The CTM will electronically send the crypto to your wallet. You can also sell your crypto and the CTM will spit out cash for you. The cheapest way to buy and sell crypto is to use an online crypto exchange such as Coinbase. Many stock brokerages also support crypto trading. Typical transaction fees are about 0.5%. CTM fees are substantially higher, ranging from 10 to 25%. The fee disparity is easy to explain. Online crypto exchanges like Coinbase have very little marginal costs. They basically just have to keep their website up and running. CTMs are far more expensive to operate. Firstly, there's a cost of buying and maintaining the hardware itself. You have to pay rent to the gas station or grocery store that hosts your CTM. And finally, you need to hire an armored car service to keep your CTM stocked with cash. Given the exorbitant fees, why would anyone in their right mind use a CTM? Let's see what Brandon Mintz, the founder and CEO of Bitcoin Depot, has to say about this.
Yeah, great question. So there's really three different buckets I like to break it into. The first one being that cash economy bucket made up of people who just prefer to use cash, but also most importantly, people who are underbanked and unbanked, which is close to a quarter of the US population. Actually, a lot of people don't realize that. And according to a few studies out there, those are the people who are using crypto the most. I've read studies that say, people within that demographic have adopted crypto, own crypto, more than 2 times as likely as just the general population.
According to Bitcoin Depot, the main use case for crypto ATMs is for people who lack bank accounts or simply prefer the convenience of using an ATM instead of an online crypto exchange. Specifically, he said that unbanked people use crypto at 2 times the rate of the general population. You need a bank account to deposit money into a crypto exchange. For people who don't have bank accounts, their only way to buy crypto is through a CTM. Unfortunately, this narrative is not supported by the data. Every year, the FDIC conducts a survey of unbanked people in the United States. Currently, 4.5% of US households lack bank accounts. Being unbanked is very expensive. If you don't have a bank account, you cannot receive paychecks via direct debit. Many unbanked workers receive paper checks from their employers. They can use check cashing services to convert this into cash. Check cashing services generally charge very high fees. Alternatively, they may get paid under the table with paper cash. The main reason people cite for why they are unbanked is that they don't have enough money to meet minimum balance requirements, or they don't trust banks. According to the Consumer Financial Protection Bureau, you usually need to make an initial deposit between $25 and $100 to open a savings or checking account. Bitcoin Depot discloses that their median transaction size is $250. If you have $250 to spend on crypto, you have enough money to open a bank account. This runs counter to the narrative that unbanked people use crypto ATMs. The Bitcoin Depot CEO claims to have seen studies which say unbanked people own crypto at 2 times the rate of the general population. He does not disclose which studies he's referring to. According to the FDIC, 5% of banked households own crypto, while only 1.2% of unbanked households own crypto. This makes sense. Unbanked people tend to be lower income. They don't have the disposable income to make speculative investments like crypto. For the vast majority of people, it makes no sense to pay 20% transaction fees to buy Bitcoin at an ATM. But there is one class of people who are more than happy to stomach these high fees. I'm referring to criminals. If you're a merchant of controlled substances, you might have a lot of cash, but it's very difficult to store and move this cash around. If you deposit large amounts of cash at a bank, this will raise red flags, and you may be reported to law enforcement. Crypto ATMs provide a way to anonymously convert cash into digital assets. Once you have crypto, there are many ways to move it around, obfuscate its source, and make it look like legitimate income. In 2022, a man named Robert Taylor was indicted for running illegal Bitcoin ATMs. He had 46 Bitcoin ATMs across New York, which converted more than $5 million of customer cash into Bitcoin. Customers were not asked to provide any identifying information, and the ATMs charged fees of 10 to 20%. When a customer complained about the high fees, Taylor replied, quote, "Bro, we gotta maintain everyone's privacy. It's worth the money," unquote. Most of the larger crypto ATM operators have Know Your Customer policies, requiring you to show a government-issued ID before depositing large sums of cash. This deters money laundering, at least to some extent. But one thing that's much harder to prevent is the scammers who trick people into sending them crypto via ATMs. According to the FTC, in 2023 alone, US consumers lost over $110 million from scams involving crypto ATMs. The real number is likely much higher, as many of the scams go unreported. Scammers disproportionately target elderly people who tend to be less tech-savvy. Scammers often pretend to work for the IRS and say they need to transfer Bitcoin to resolve a tax issue. Or they'll claim that a family member is stranded abroad and urgently needs the money to get home. Things of that nature. The scammer sends a QR code to the victim and instructs them to deposit cash into a nearby crypto ATM. The crypto is immediately transferred to the scammer's crypto wallet. In the traditional banking system, fraudulent transfers can be reversed, but with crypto ATMs, the scammer's wallet is anonymous. Once the crypto is sent, there is no way to get it back. These types of scams are extremely difficult to prevent. Even if the CTM has stringent Know Your Customer procedures, the victim can supply their own government-issued ID. There's no way to tell if the digital wallet receiving the crypto actually belongs to the person depositing the cash. The number of CTMs in the US surged during the crypto bull market of 2020 and 2021. At the peak in 2022, there were more than 35,000 CTMs nationwide. Over the past 2 years, the number of CTMs has declined as illegal CTMs were shut down. Legitimate CTM operators that enforce KYC procedures often struggle to attract customers. Other than criminals and scam victims, there really aren't very many people who want to pay a 20% fee to buy Bitcoin. Take the example of Bitcoin Depot. As of the third quarter of 2024, they operated 8,300 CTMs across the United States and Canada. During that quarter, they processed $135 million of transactions. That translates to about $180 per CTM per day. The median transaction size is $250. The fact that the average daily volume is less than the median transaction size suggests that many CTMs go entire days without serving a single customer. They charge transaction fees of about 20%, but they also have to pay rent to the gas stations, transportation for the cash, etc. So each CTM only makes about $30 of gross profit per day. With such thin margins, Bitcoin Depot was only able to eke out a paltry operating profit of $5 million in the quarter. And Bitcoin Depot is the largest CTM operator in the United States by far. Bitcoin Depot went public in 2023 in a SPAC transaction that valued the company at $900 million. Its revenue and profit numbers have disappointed investors, and its share price has declined by almost 90%. CTMs were a desperate attempt by the industry to prove that cryptocurrencies have real-world utility. It's now safe to say that this experiment has failed. Alright guys, that wraps it up for this video. What do you think about crypto ATMs? Let us know in the comments section below. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.